Okay, today I wanted to take the time to do some basic like trading explanations, and the first one I want to start with are candles. So before you can even start to trade or really develop some sort of strategy, you really need to know how to read candles. And here are, the chart pattern that you're seeing is a candle. So I mean, you can change this so it can be lines, right? And that just gives the close of the day. But candles tell you where price went based on the time frame. So right now we're on an hour time frame, and I did it just so we can get some more variance in the candles, so we could see maybe more examples of what they can look like. I mean, they can look like a bunch of different varieties of candles, but let me zoom in here. So I got a screenshot of just cheat sheet, candlestick cheat sheet. And this is a good, guide to kind of show you or explain to you what a candle is. Let me zoom in here. So the way the candle is, you have the open, the close, and then for this candle, price opened up here and then it closed down here. So that's why it's blue here. It's going to be red on my other chart. And then this is the high and the low for that candle. And then if the candle is green, but this is displaying it as I guess clear or white, it opens here, closes here, the high and the low. So we can go back to our chart, and you can see that. So this is this is a red and a green. Okay, so the red one, if you look up here, this one opened at 23,576 and it closed at 23,391. So that's why it's red. And then let's pick one with some good wicks. So that's what they call them, candles. They look like they have wicks on them, and then you have the body of the candle. So they just call it a candle. So this one has some larger wicks on the above it and below it. So you can see it opened here, closed here, but the price got as high as 23,447, and then it also got as low as 22,262. This one, let's find a green one that has some high and low wicks. Man, that's kind of difficult to find, even though I'm such on a fine time frame, the 1 hour. Well, this one's probably good enough. I'll zoom in there. Okay, so this one, it opened here, closed here. Price got as low as where the bottom of this wick is, as high as where the top of this wick is. So that's a candle. And then you have specific types of candles. And the ones that I pay attention to are these hammer or doji candles, because those are reversal candles. And I mean, there's different strategies that I use, but if I'm looking at if price is going to bottom out or top, see, these are bearish. So bullish means you're optimistic about price. Bearish means you have negative, you feel negative about price. So as price would trend up, you would get these types of candles, and that would indicate that price try to run up. You had a bunch of sellers, and then you start to have a sell-off. Same thing on the bottom. I mean, on the where the bullish reversal would be. Price is going down. You get this type of hammer or doji candle, and then it goes up. So the hammer and the dojis are extremely easy to spot on the down or uptrend. It's these other patterns that you kind of have to start to understand a couple more things. So like you have 2 candle patterns, 3 candle patterns. Once I've developed kind of like my strategy, I use, like I said, the ones that catch my eye first are the doji candles. It's these candles with the larger wicks, because you can spot them really quickly. and then I go to my other indicators to kind of understand the trend. But the very first thing you should do whenever you learn how to trade is to read a candle. The number one rule for trading, though, is risk management. That's number one. So whatever you can read on trading risk management, That's what you should also focus a lot of your time on. But yeah, so you can search this candlestick cheat sheet, go over this, kind of understand. You have bullish engulfing. That's where you have positive price action, and then the other candle engulfed the high and the low of the previous bearish or green candle, and then that would be bearish. You have the same thing on the bullish side. You have a red candle, and then you have a green candle that would engulf the high and the low. Then you have these where you have three consecutive candles going up, and then that's bullish. And then on the flip side, you have three red candles going down. That'd be bearish, and we can show that here. Pretty sure that, yeah. So I mean, what would be a good example? This would probably be a good example. Three going up. Here's three going down. It's super basic. I mean, there's a lot of other things happening here, but I mean, that's what these candles are. And then here's one of these kind of doji hammer candles that I was telling you about. Prices going down, you get buyers come in, and then price goes up. We can go on a larger time frame. Let's see. Nope. Nothing on this chart. Let's go to the daily. Here's one on the daily. So price went down, doji candle, price goes up, consolidates. That's kind of like a doji or a hammer, and price went up. But I mean, that's what candles are telling you. We can go on the weekly. Oh wow, no, not so much on the weekly, but oh, here's a reversal candle, but it didn't quite reverse. You had buyers brought the price up, sellers sold. Eventually, it went down, but it wasn't immediate. But that would have been an indication to you. Oh man, I see this candle. Let me look at my other indicators and kind of see where we're at. If I think there's going to be kind of a reversal. And here's like that engulfing candle that I was talking about. You had a red candle. It didn't quite go all the way down, but it was close. And then, price ran up. So that's candles, kind of like a guide. Here's like a doji candle that's not really on the bottom end of price falling down. But you found support, price went up. Here's the same thing. Sold off, found support in buyers, price went up. So yeah, that's it. Just quick review or basics on candles. I'll probably do a price analysis a little bit later. We had a huge move. I'll just do it right now. I'll be quick. We had a huge move in Bitcoin, massive. Whenever this channel broke, I said that we would have, the target would be, this one has 22.3, but I think it said 22.4. We went there, we went through it, we went a little bit above it. Actually, a lot above it. No, not a lot. Like 5% maybe. And then price came down. Actually, this should have been more here, right when we broke. So went there, went above it. Let's see how far we went above it. It's a general idea. Yeah, 6%. Came down. The next day, tested it, broke out again. But here's what I want to highlight and what my base strategy is basically whenever I'm doing analysis, and it's a TD sequential. We have a 9 on the daily. We had a 9 on the 4-hour, and we're already getting a reversal. And we had a 9 over here on the hourly. So that was 3 time frames that was telling you. And we even had one here. Let's see when we very first hit the 4-hour 9. So 4-hour 9 was at 2,200 hours on December 19th. This came a little bit before. But I mean, there was 9s showing up, so it should have alerted you that, hey, we're probably getting a high. And the way this TD sequential works is 6, 7, the 8 got just as high as the 6. That's probably the top. We have a 9. So we're going to watch the next couple of days. And if there is a reversal, which I think there will be, my first target for the downside is 20,907. Since we broke the high here back on the 1st, the previous all-time high, and then we broke out of this channel here, the relevancy of all these lower price targets has pretty much gone out of the window. Even these 19,588, 19,5, right now, what holds the most relevancy is 20,907. So, and that's on the 4-hour. So if price starts to collapse, here's will be the first set of resistance where we found support before at about a 22.3. So if price starts to fall and we get a sell off, that's my first target. Probably scale in some more there, or if you had exited a position, you would scale in more there. We can look at the hourly 30 MA, which I said was great to trade, and it is. Let's see. Let me make these all 30 so we can see one line. So the channel, you had multiple things, right? So you had price close above this 30 right here. And then if you would have waited a candle, you would have got in here. And there's a reversal 9 right there. So that's the 30 MA telling you to go in, the 9 telling you that that's an exhaustion area. And then after that, we broke we had an hourly close above that channel, and it was all over with after that. We just ran up. So here would have carried you, we can look at kind of an idea of what the return would have been. We would have got in here. And then it told you to exit if you would have waited a candle right here. So that would have been 18% in about 2 days or a day and a half. Not bad. And then you would have entered here. And then it would have told you to exit. So that's the thing about this 30 MA. Whenever you have kind of a breakout forming, it gives you a big return. Whenever you start to get price go sideways, it gets you in and out a lot. So you have to kind of maybe use your better judgment, or not better judgment. You need to use your other indicators to kind of determine if you feel like price is exhausted, I should enter. If you would have entered here, again, you would have strictly followed the strategy. And then you would have exited here, because it looks like the candle's about to close here. That's 1%, but if you would have went by the 9, you could have got another 4% out of it, 5%. But right now, it looks like we're consolidating. Our indicators are through the roof. I mean, on everything. You can look on RSI. So you have price trending up, indicator trending down, bearish divergence. Hourly did the same thing, right? Price goes down. Price is going up, indicator going down. Daily, same thing. High, low, same thing over here. So it's telling you, you can look at the CMF too, which is the money flow in and out of the asset. And it was, it's pretty extreme. There you go, same thing as the RSI. Here, price is at a certain area. Indicators kind of topped out. Declines as price goes up. That's a sell signal. This one, this CMF looks bad. So this is kind of like this is almost at 0, but if you were to put a line here, you can kind of see that once price crosses this, it starts to accelerate, or eventually accelerate. So we had price cross here. Yeah, we consolidated a little bit, but we have consolidation with the money flow going up, so that's bullish. And we were right at the top of the channel, so that's even more bullish. And then we had the breakout. So this could have told you probably around here, once we consolidated for a couple of hours. Well, this is more than a couple of hours. Almost a full 2 days. You could have entered just based off of price consolidation and CMF going up. And then it broke out. But you can see here where if we kind of are at this 0.1 area, once we break it, we kind of get a breakout. Once we break it, we kind of get a breakdown. Here, once we break it, we consolidated and we broke out. Here, we're going to close below it so we could get a breakdown. So I'm looking for a little bit of a breakdown. And then we had the 9 this was retest. So the top of the 9 was retested. That's where these are at. So this one, it got retested with the green one, or with the red one. If we get a green 2 closing above a green 1, that's bearish, especially if it closes below this low of this 9. The support would be here. The support for this run up, for this 9 count, is right here at the bottom of this one at 22,679. So if we close, like I said, we might find support here, right here, probably the bottom of this candle, right at 22, say 22.5 area. So if we close below 22.5, that won't be good. If we close below 22,679, that'll be the first indication of we could potentially drop significantly. So, and I say significantly, what's this drop, right? So say I bought the high at the 6, I'm horrible at my timing, and I bought the high. And I'm looking at 29,907. That's a 13% drop. And like I said, I think in this market, our major drop is going to be between 15 and 25%. That's above 15%, 13% drop. So we could get a big bounce there and then go higher. And then the major support would be at the breakout of the channel. And that would be, if we go lower than 2907, that would be great. As far as if you're looking to enter the buy, your bottom buy setting, your limit buy would be right here. You would set one right around, say, it's at 9.7 if you wanted to kind of make sure, maybe price doesn't exactly hit there. Maybe do it $100 above that, right? So 9.7, you do it a little bit above that, say $100. That would be, that wouldn't even be a lot. That would only be not less than 0.5%. So maybe you could do it a full percent. Maybe do it at like 19,950, somewhere around there, to kind of ensure that you're going to get in. Because look, whenever it comes to trading, no one catches the absolute top and no one catches the absolute bottom as far as whenever you're trying to exit. Now, someone caught the absolute top if you're the buyer. Someone bought this top. Someone bought 24,200, right? But as far as, and someone sold it, they caught it exactly, right? If there's a buyer, there's a seller, but the odds of you getting the exact top and the exact bottom is extremely rare. Your goal in trading is not to get the exact top and get the exact bottom. Your goal is to be profitable. And if you were profitable here, you got the breakout and you saw the 9 and you wanted to exit, you still made 5%, almost 6%. You're profitable. Yeah, you didn't get the rest of the run up, but I mean, that's trading, right? So that's why you perfect your strategy, your method. You become more confident whenever you trade. But the goal in trading is not to be right, or I mean, it's kind of to be right, but it's to be profitable. That's what I'm trying to get at. It's to be profitable, managing your risk. So yeah, that's quick Bitcoin. Maybe I'll cover some other stocks. Maybe later today I'll do a video or something like that. But thanks for watching.